Classic stochastic oscillators are very popular among traders because it can be very effective when used in the right market condition and with the right settings. The MTF Stochastic V2.0 indicator was developed for the purpose of giving traders a multi-timeframe trading approach using stochastic oscillators. What is the MTF Stochastic V2.0 indicator? The MTF Stochastic V2.0 indicator is a momentum indicator which is based on the stochastic oscillator, SO, which is a widely used momentum oscillator. This version of the stochastic oscillator is unique because it has a multi-timeframe component built into it, thus the prefix MTF and quat. It plots a standard stochastic oscillator, but it also gives traders the option to choose which timeframe the indicator would base its stochastic oscillator indication from. Stochastic oscillator is a very popular indicator among traders. Here you will not only find the explanation of what it is and how to use it, but you will also be able to download Stochastic Multi-Timeframe (MTF) indicator for MetaTrader 4 to help your trading. What is stochastic oscillator? Stochastic oscillator is a momentum indicator. Traders have been using stochastic for over a half a century, and even so, it is still very popular. Being a momentum indicator, stochastic is useful to understand if a trend is exhausting. Stochastic is the result of the comparison of the price over a specific period of time. The value of the indicator fluctuates between 0 and 100. Stochastic indicator's graph includes two lines: main line, which is the value of the indicator calculated with the formula presented below. Signal line, which is the moving average of the main line on a specified period. It helps in smoothing the changes. How the MTF Stochastic V2.0 indicator works. As mentioned above, the unique feature this indicator has compared to the standard stochastic oscillator is that it allows traders to select which timeframe the indicator computes from. This indicator plots a stochastic oscillator the same way a standard SO computes for its stochastic lines. The difference is that it modifies its computation based on the number of minutes the user selects as a basis for its computation. How to use the MTF Stochastic V2.0 indicator for MT4. This indicator allows traders to modify the timeframe the indicator would base its computation from using the time frame variable within the indicator settings. The value used is in minutes. For example, if you prefer to use the 5-minute chart, then you would type in 5. If you prefer to use the 1-hour chart, then 60. If the 4-hour chart, 240. This would disregard the time frame you are using. However, if you leave the field as 0, 0, then the indicator would use the time frame you are trading on. Stochastic oscillator formula. The mathematical formula for the stochastic oscillator is %K equals C, Lx, Hx, Lx, x100, where C is the close price. Lx is the lowest price in the previous X candles. Hx is the highest price in the previous X candles. %K is the stochastic's value of. How to use stochastic oscillator. As mentioned earlier, the stochastic value is ranging between 0 and 100. Stochastic includes the main and the signal lines. When studying this indicator, you usually consider stochastic above 80 means that the price is overbought, so it will probably retrace or consolidate. Stochastic below 20 means that the price is oversold, so it will probably rise or consolidate. When the main line crosses the signal line, upwards or downwards, there is probably a change in the trend. While those are common behavior traits, there are also exceptions with this oscillator. In fact, not always a line cross would mean that the price will change its direction. Also, in case of a strong trend, stochastic can remain in an overbought or oversold area for an extended period of time. Just as with most stochastic oscillators, lines that breach above 80 are considered overbought, and lines that drop below 20 are oversold. Crossovers of the two lines beyond these levels are considered high probability mean reversal signals. However, it is best to trade these signals in confluence with market flow setups and price action. Buy trade setup. When to enter. Open a buy order on the confluence of a crossover of the two SO lines occurring below 20, and a bullish reversal price action forming on a support area. Set the stop loss on the support